I'm Heather Houghton with Oil and Gas Investor. We're with Marty Goosen, President for the Houston region of JP Morgan Chase, and Rob Eschweiler, Managing Director for JP Morgan Chase. So let's start with you, Rob. Let's talk about the energy outlook. Are energy companies optimistic about 2017, and why?
Yeah, actually I think that the tone here and the mood here is very positive relative to last year. And there's a lot of good things happening. Obviously oil has rallied nicely, and I think we continue to feel like the background and the macro backdrop continues to be supportive for oil. Really what's happened over the last 3-4 months has been the world getting their arms around the OPEC deal on the production side. Everything is supply and demand, and we've had a ton of supply on the market, and frankly, it drove prices down last year. The market got very excited about OPEC agreeing to cut their production, and actually at this point it appears as though they're actually complying with the production cuts that they agreed to. And so as a result, we've had a really nice increase in the price, and I think the markets are discounting a lot of that supply-demand dynamic. At this point going forward, it's really going to come down to the supply here in the United States, because at the same time that the OPEC production has come down, U.S. production has actually increased significantly. And we're seeing very, very highly productive fields, especially in the Permian and the Eagle Ford space, where with technology advances and the costs having come down the way they have, production's actually gone up significantly. Companies are making good money doing it. And so at this point, it's really going to come down to how much of that in production increase offsets the production decrease for the international players. And so at this point, when you talk to the service companies, anytime there's an increase in activity, optimism has obviously been going up.
Speaking of the U.S., can you talk about the U.S. economy as a whole?
Sure. Look, we've had a very significant amount of movement, especially in the capital markets, in anticipation of a lot of optimism on some policies that have been coming from the new administration. At the same time, while the market's getting very excited about that, a lot of those things don't have as large of a multiplier effect on the economy themselves. While we're still moderately positive on the economy, and I think we could do low twos this year, maybe mid twos in terms of GDP growth, maybe you could do 2.8% or so next year. That type of growth has actually been very welcomed, and I think while we're very excited about the impact that has on corporate earnings, I think we at the same time are measured in terms of how much that's going to actually impact the real economy.
Now let's shift a little bit to personal finance.
Thank you.
Marty, can you talk about one piece of investment advice everyone here at NAPE should hear?
Yes. We, like all entrepreneurs, energy investors go all in. They really do commit themselves to their investments in the industry. And we've seen that for decades and decades, and that's where they make their wealth. And it's a very important source of wealth for them. But at the same time, as they continue to do that, we want them to think about how they should be diversified in their personal portfolio. A second trend we see among many energy investors, we see them also concentrating their cash investments like stocks and bonds, again, in the energy space, in areas they know. They know the companies, they know the management teams, and so they buy MLPs and they buy energy stocks of companies they know. Again, just increasing their overall exposure to the energy industry. And we think that they need to remember the risk of the energy field. It does have cycles. It has very deep cycles, as we saw just 2 years ago. So we need to ask them, please be careful. When you're investing your liquid investments, consider investing in things that are not correlated to energy, outside of energy, other stocks and bonds that have nothing to do with this space, and hopefully preserve that wealth in case there is a down cycle in the energy industry. That would be our one major piece of advice for everyone in the energy industry.
Great. Thank you both so much for joining us. If you want more information, you can go to jpmorgan.com/pb/energy.